Hi guys, let us continue. We stopped at page number 1.8 beginning part. Like last topic we covered was using the financial information. Okay, now the next topic is evolution of accounting as a social science. So initially they have given you history and development of accounting. This is my favorite part actually in accounting. I don't know why, but I like this part where they are discussing how accounting as a field has evolved, right? So here they're talking since 4000 before century. Some references are given. Okay, so let us read first of all, and we'll continue. Accounting finds its roots as early as around 4000 before century. Okay, so yeah, right now we are in 2026, and this is somewhere before century. So 46. Sorry. 6000 before 6000 years, this is they are talking about when where Egyptians used some form of accounting for their treasuries. Okay, the in charge of treasury had to send day-wise report to the superiors known as wazirs, and monthly reports were sent to king. Okay, so wazirs used to receive daily report and king used to receive monthly reports. Babylonian, known as the city of commerce, used accounting for business to identify the losses that took place due to frauds and lack of efficiency. Greece used accounting to divide the revenues received among treasuries, maintaining receipts, payments, and balance of government financial transactions. Romans used memorandum or daybook wherein receipts and payments were recorded 7000 BC to 4000 AD. Okay, so they have given you reference for Egyptians, Babylonian, and Greece. Okay, China used sophisticated form of government accounting as early as 2000 before century. Accounting practices in India could be traced back to a period where Kautilya, a minister in Chandragupta's kingdom, wrote a book named Arthashastra, which also described how accounting records had to be maintained. Luca Pacioli, a Franciscan friar merchant class, book Summa di Arithmetica, Geometria, Proportion, and Proportionality, Review of Arithmetic and Geometric Proportions in Venice, 1494, is considered as the first book on double entry bookkeeping. Now, this is the reality of current period. Okay, so right now whatever we are going to learn is a double entry bookkeeping. A portion of this book contains knowledge of business and bookkeeping. He used the terms debit and credit in his books. These were the concepts used in Italian terminology. Debit comes from the Italian debito, which comes from the Latin debita, and debio, which means owed to proprietor. Credit comes from the Italian credito, which comes from the Latin credo, which means trust or belief in the proprietor or owed by the proprietor. Right now, just keep it in this manner. Okay, this is only for the science people. Okay, and so commerce people are aware what is debit credit, who has done commerce. So for the science people, just don't get confused in this part. This debit credit will come very more frequently in further topics, and you will understand. Okay, in explaining double entry system, Pacioli wrote that all entries have to be double entries. That is, if you make one creditor, you must make some debtor. He also mentioned that merchants' responsibility is to give glory to God in their enterprise, to be ethical in all business activities, and to earn a profit. He discussed the details of memorandum, journal, ledger, and specialized accounting procedures. Okay. In its oldest form, accounting aided the stewards to discharge their stewardship function. The wealthy men employed stewards to manage their property. The stewards in turn rendered an account periodically of their stewardship. This stewardship accounting was the root of financial accounting system. Although double entry system was followed, stewardship accounting served the purpose of businessmen and wealthy person at that time. In most of the countries, stewardship accounting was prevalent till the emergence of large-scale enterprise in the form of public limited companies. In the second phase, the idea of financial accounting emerged with the concept of joint stock company and divorce of ownership from the management to safeguard the interest of the shareholders and investors. Disclosure of financial statements, mainly profit and loss account and balance sheet and other accounting information, was molded by law. Financial statements give periodic performance report by way of profit and loss account and financial position at the end of the period by way of balance sheet. It got the legal status due to the changing relationship between the owners, economic entity, and the managers. With the democratization of society, the relationship between the enterprise on the one hand, the investors, employees, managers, and governments on the other have also undergone a sea change. Also, the prospective investors and other business contact groups want to know a lot about the business before entering into transaction. Thus, financial accounting emerged as an information system to identify, measure, and communicate useful information for informed judgment and decisions by a broad group of users. In the third phase, accounting information was generated to aid management decision making in particular. It contributed a lot to improve the quality of management decisions. This new dimension of accounting is called management accounting and is development of 20th century only. It is pervasive enough to cover all spheres of management decision. Lastly, social responsibility accounting is in the formative process which aims at accounting for the social cost incurred by business as well as the social benefit created by it. It emerges from the growing social awareness about the undesirable byproduct of economic activity. While earning profit, an enterprise incurs numerous social costs like pollution, using the resources of society like material, land, labor, etc. To compensate for this social cost, in today's world, an enterprise is expected to generate some social benefit also, like employment opportunities, recreation activities, more choice to customers at reasonable price, better quality product, etc. Therefore, it is demanded that the accounting system should produce a report measuring the social cost incurred and social benefits generated. Social science study men as a member of society. They concern about social process and the results and consequence of social relationship. The usefulness of accounting to society as a whole is the fundamental criteria to treat it as social science. Although individuals may benefit from the availability of accounting information, the accounting system generates information for social good. It serves social purpose. It contributes for social progress. Also, it is being adapted to keep pace with social progress. So, accounting is treated as a social science. So in this particular part, they are explaining that how this accounting has evolved gradually. Okay, initially Egyptian, then Babylonian, then Greece, then they have mentioned of China, then India also. Okay, now currently across the globe, whatever is being followed, it is a double entry system of accounting, which is taken from the book of Luca Pecchioli. He was from France, and he has whatever he has defined, it is accepted across the globe. And gradually this accounting has turned in from only an accounting. Now from the accounting, financial accounting, management accounting has evolved in 20th century, and in the recent period, social responsibility accounting, which is in a formative process right now. Okay, so there are many different theories are there for the same. And in our academic also, we will when you people will move ahead, you will learn about more and more, like somewhere you will learn about the employee cost, how employees are valued in the organization. Okay, as I mentioned yesterday in the previous lecture, that you can go to website of the companies which you like and download their audit report and go through it. So if you go there, you will have now how many number of employees are there, how much revenue is being generated. Revenue means sales income is generated from the same, etc. You will get to know from there. Okay. So there is a part of a social responsibility. Apart from that, environmental concerns are there, which is also part of social responsibility, that whatever for the profit making, if I am doing a certain activity, it should not be such that I am like just thinking about the profit element and not taking into consideration about environment, etc. Right? So if you are aware, today we are facing water issues everywhere, right? There is many theories are there which mentions that there will be water shortage in future, but the main cause of the water pollution among all others is industrial excess chemical and etc usage, and apart from that the home use of detergent which is petroleum based. Okay, so you might be aware about Arita. Some people call it Rita or something. Okay, so these are the actual detergent kind of a thing. I can't say that it is a detergent, but it is a soap. Okay, so that use of that was not harmful to the water and everything. Water can be cleaned easily, but powder and shampoo and whatever which we are right now using, it is polluting the water, in which takes sufficient time to get that water reusable. Okay, and so that's one of the part which I am sharing you here. Okay, so water is being polluted by the detergent, and if that is stopped, then there will be a different scenario. So let's continue. It's a different theory which I shared with you. So let's continue further. Objective of accounting. Okay, so the objective of accounting, so whatever we do, there has to be some objective, right? So what is the objective of accounting here? Systematic recording of transaction. First of all, in accounting, what we do systematic thing. Okay, second is ascertainment of results of above recorded transactions. Okay, so in systematic part, what they are mentioning is basic objective of accounting is to systematically record the financial aspects of business transaction. It is bookkeeping. These recorded transactions are later on classified and summarized logically for the preparation of financial statements and further analysis and interpretation. Okay, so we do systematically something, we do systematically, and that systematically is we are writing financial aspect of business transaction, that is bookkeeping. Okay, next, ascertainment of results of above recorded transactions. Accountant prepares profit and loss account to know the results of business operations for a particular period of time. If the revenue, that is sales, exceeds expenses, then it is said that business is running profitably. But if expenses exceeds revenue, then it can be said that business is running under loss. The profit and loss account helps the management and different stakeholders in taking rational decisions. For example, if business is not proved to be remunerative or profitable, the cause of such a state of affairs can be investigated by the management for taking remedial steps. Okay, so ascertainment of results. Okay, so what is the results here? Profit or loss? If earning is more than expenses, then it is a profit. If expenses are more and earning is less, then it is a loss, deficit. Okay, surplus, deficit, profit, loss, these kind of words they will be using. Next, ascertainment of the financial position of the business. So what is mean by financial position? Whatever business is having, and whatever business is supposed to pay somebody. Okay, so for example, there is a factory, there is an office. Okay, there is a stock available to sale. Okay, some people we have given goods on credit, so they are supposed to pay to us. Okay, these are things which business has an ownership, right? And there are few people from whom we have borrowed the money. Some people have given goods on credit to us for sales. Okay, so these are the people whom we are supposed to pay the money. Okay, so that is the position, actual position as on date or as on situation. Okay, so usually position will be as on date, means okay, as on date position will be defined usually. A businessman is not only interested in knowing the results of the business in terms of profit or loss for a particular period, but is also anxious to know that what he owes liability to the outsiders and what he owes assets on a certain date. To know this, accountant prepares a financial position statement, popularly known as balance sheet. The balance sheet is a statement of assets and liabilities of the business at a particular point of time and helps in ascertaining the financial health of the business, providing information to the users for rational decision making. Accounting is a language of business. Next is accounting is a language of business. Communicates the financial results of an enterprise to various stakeholders. Now, why again and again this language of business is coming? So everybody will prepare account in a same manner. Okay, in a same manner, in a uniform manner, everybody will do it. So this becomes a language of business, which communicates the financial results of an enterprise to various stakeholders by means of financial statements. Accounting aims to meet the information needs of the decision makers and helps them in rational decision making. One more thing, if you guys are studying any company or any financial statement or something, then I would suggest choose one good company. Okay, whatever of your good choice, and study that particular one report thoroughly. You should be aware about each and every page, each and every numbers and everything. Okay, and once you are done with one report, say for example you have taken a report for financial year 24-25, then go to previous year report, previous year 5 years report, and just try to understand what is the difference between that two report. But make sure that you go with one company only. Okay, don't download too many reports or something. It will not help as such. Okay, so you should be thorough with one part, and every other companies are usually preparing in the same manner. All the accounting and everything will be same. So first of all, you should be aware with the one part. Okay, once when your one part is clear, and then you can analyze any other reports in a very quick manner. Okay. Yeah. So accounting as a language of business communicates the financial results of an enterprise to various stakeholders by means of financial statements. Accounting aims to meet the information needs of the decision makers and helps them in rational decision making. To know the solvency position, by preparing the balance sheet, management not only reveals what is owed and owed by the enterprise, but also it gives the fund information regarding concern's ability to meet its liability in the short run, liquidity position, and also in the long run, solvency position, as and when they fall due. Okay, so liquidity position and solvency position. Liquidity positions means how fast we are able to pay somebody. Okay, what is the status means if I have taken some goods on credit, means I have taken goods without paying somebody any money right now, and I'm going to pay them in future date. Okay, so that is my outstanding, right? Outstanding payable. And if I have to receive some money likewise from my customers whom I have sold on credit, they have not paid me right now, they are going to pay me in future. So that is my debtors. Okay, so the difference should be more, not less actually. Okay, debtors should be more always than creditors, then only I will be able to adequately meet the creditors of the business, otherwise it's very difficult. Okay, so that is the liquidity position. And solvency positions is the your all the assets should be more than your liability. Your assets always should be more than your liability. Okay, then you are solvent, otherwise it is insolvent. Insolvent means your land, building, if you sell everything and still after that the person is supposed to pay is more, payment is more than what is person is having. Okay, so that is your solvency position. Yeah. So here they have given you a brief chart. An overview of objective of accounting is depicted in the chart given below. Objective of accounting: systematic recording of transactions, that is bookkeeping, journal, ledger, and trial balance. Okay, this is systematic record of transaction. Okay, ascertainment of results, it is manufacturing account, trading account, profit and loss account. Manufacturing account, trading account, and profit and loss account. Okay, so here you will get the results. Ascertainment of financial position, that is balance sheet. Ascertainment of financial position, where it is a balance sheet will give you the position. And communication information to various users is financial reports. Okay, functions of accounting. The main functions of accounting are as follow. Measurement: accounting measures past performance of the business entity and depicts its current financial position. Forecasting: accounting helps in forecasting future performance and financial position of enterprise using past data and analyzing trends. Decision making: accounting provides relevant information to the users of accounts to aid rational decision making. Comparison and evaluation: accounting assesses performance achieved in relation to targets and discloses information regarding accounting policies and contingent liabilities, which play an important role in depicting, comparing, in predicting, comparing, and evaluating the financial results. Control: accounting also identifies weaknesses of the operational systems and provide feedbacks regarding effectiveness of measures adopted to check such weaknesses. Government regulations and taxations: accounting provides necessary information to the government to exercise control on the entity as well as in collection of tax revenue. So what are the functions here of accounting? Like it measures your past performance of the business entity and depicts its current financial position. Okay, so as I mentioned, you will be able to analyze past period things and what current status is there. Now sorry, forecasting. So with the available data of past period, you will be able to focus something. Okay, say for example, in last particular period, in basis your monthly sales basis your monthly sales, you can predict this particular sales, certain sales might happen. In my previous session, I have given you example about the rain, right? That how this meteorology department predicts that how much rain is going to happen and etc. So they have some past data, and basis that they run some analysis, and they presume that if this particular instances are happening, accordingly likewise the weather will be such in few days afterwards. Okay, so here in business also, whatever has happened in past 3 to 5 years, similar thing might happen in current period or in the next coming period also, right? So basis that, so what is end result over here, that if you are aware about the past sales data, accordingly you can make your purchase or you can do the production etc. That if certain amount of product requirement was there, so before the period comes, you are ready with the available goods and resources. Okay, next, decision making. Okay, so yeah, we have after forecasting we are coming decision. The decision is your decision is rational rather than instinct based. I mentioned that decision should not be an instinct based, it should be rational decision making. As and what is the rational thing over here? The rational thing is your past database. Okay, next, comparison and evaluation. Okay, so now you will be able to compare the things. Okay, and accordingly once you compare the things, you will be having the adequate output, you will be having adequate output basis after comparison. Okay, you can evaluate, you can compare the things, that this say for example, last year it was heavy rain, current year rain is not that much. Okay, so basis that demand will slow down. Okay, every 3 years, once in a 3 years there is a heavy rain, like, okay, so in the remaining 2 years rain is medium range. So basis that a person can make a decision. Okay, control. So once you are aware about the past and you are able to predict the future, you can control lot many things. Okay, so here you are able to control many things. And now last is government regulation and taxation. So whatever business activities are done, okay, some or the other way there is government revenue is being generated. Means government is we are supposed to business is supposed to pay to the government some kind of taxes, and individual also pay the taxes on their income, and on goods also government charge the taxes. This is a part of direct tax and indirect tax. Direct tax is the individual who are paying the taxes, okay, from their income, whatever a person is earning. After certain income rises, they're supposed to pay to the taxes to the government. Okay, that is your direct tax, directly taken from the person. Indirectly it is taken from the person, from the goods and etc. Okay, indirectly, say for example I buy a calculator. Okay, so my calculator value is say for example 300 rupees. Okay, on that 18% is GST. So 18%, 300 rupees into 18, there is 54 rupees. I have to pay 354 rupees to the vendor. Okay, but the vendor will pay to the government that 54 rupees. Vendor will pay to the government that 54 rupees. Okay, so this is the indirect. Indirectly it is taken from me and it is going to the government. Okay, yeah, so let's go ahead. So bookkeeping. Bookkeeping is an activity concerned with the recording of financial data relating to business operation in a significant and orderly manner. It covers procedural aspect of accounting work and embraces record keeping function. Obviously, bookkeeping procedures are governed by the end product, the financial statements. The term financial statements means profit and loss account, balance sheet, and cash flow statements, including schedules and notes forming part of accounts. Bookkeeping also requires suitable classification of transactions and events. This is also determined with reference to the requirement of financial statements. A bookkeeper may be responsible for keeping all the records of a business or only a minor segment, such as position of the current customer's accounts in a departmental store. Accounting is based on a careful and efficient bookkeeping system. Okay, so bookkeeper might do everything together, or he might take care of a particular area. Depends on the volume of the transaction. There are no, if the business organization is big, okay, so there the activities will be divided among multiple people. If organization is small, so the one person will do all the activities. Next, essential idea behind maintaining bookkeeping records is to show correct position regarding each head of income and expenditure. A business may purchase goods on credit as well as in cash. When goods are brought on credit, a record must be kept of the person to whom money is owed. The proprietor of business may like to know from whom, from time to time, what amount is due on credit purchase and to whom. If proper record is not maintained, it is not possible to get details of the transaction in regard to the income and expenses. At the end of the accounting period, the proprietor wants to know how much profit has been earned or losses have been incurred during the course of the period. So here, if we are selling something on credit, okay, we have bought something on credit or we are selling something on credit, here we are supposed to maintain each and every record properly, so that how much money is to be paid, how much money is to be received is there available with us, and accordingly we can manage all the things in a efficient manner. Okay, yeah. For this, a lot of information is needed which can be gathered from a proper record of the transaction. Therefore, in bookkeeping, the proper maintenance of books of account is indispensable for any businesses. At this level, the major concern of the curriculum is with bookkeeping and preparation of financial statement. It seems important to mention at this point that bookkeeping and preparation of financial statements have legal implications also. Maintenance of books of account and preparation of financial statements of a company are guided by Companies Act, bank and insurance companies by special act governing these institutions, and so on. However, for sole proprietorship and partnership business, there is no specific legislation regarding maintenance of books of account and preparation of financial statements. So for sole proprietorship or partnership, there is no much regulation. Okay, but for a company, for a bank, for an insurance company, okay, there are some regulations. Accordingly, the accounting should be maintained. So at this stage, at this level, as a student you are supposed to learn, that is bookkeeping and preparation of financial statement. You should be aware how accounting is done, how accounts are prepared. Okay, law, as per law it is prepared or not, or etc., will come in the later stage. Okay, once you are thorough with the preparation part, then it will come that these are the things which you need to follow compulsorily. These are the things required. Okay, yeah. So let's get ahead. Objective of bookkeeping. So complete recording of transaction and ascertainment of financial effects on the business. So it is with respect to complete recording of transaction, it is concerned with complete and permanent record of all transactions in a systematic and logical manner to show its financial effect on the business. Next, ascertainment of financial. So here see, complete and permanent record. Okay, here they are what the word, important word is complete and permanent. Okay, so your record should be complete and permanent. Means whatever you are recording will be saved permanently in books of accounts. Okay, in your future part, you will be learning rectification of accounting. Okay, so in accounting there is no scribbling allowed, no overwriting is allowed. If there is any mistake has been done, you need to rectify it by a second entry. So your accounting should be complete and clean, no overwriting or nothing. You use a whitener and you change it or something is not allowed. And in computer based accounting, there is an audit trail is maintained. Trail means whatever has happened in past, who has passed the entry, when it was passed, what authority was there, etc. Everything is mentioned over there. Okay, so in basis that trail, we can analyze that if a particular transaction has been modified, has been changed. Okay, so with respect to permanent record, this is very important thing, and for which a complete chapter will be there for you people. Okay, you will learn in the ahead sessions. Next is ascertainment of financial effect on the business. It is concerned with the combined effect of all the transactions made during the accounting period upon the financial position of the business as a whole. So it is concerned with the combined effect of all the transactions made during the accounting period upon the financial position of the business as a whole. Okay, so combined effect means every day we are making some sales, every day we are purchasing something, every day we are providing some services. Okay, so combining everything, what is the happening at the end of a period, what is happening at the end of a particular period. Okay, for 12 months, how much total sales is there, how much purchase we have made, how much expenses we have incurred, how much services we have provided, how much services we have received. Okay, combining, we are making the total of it at the end of a period. Every day we are doing certain activities, at the end of the period it is combined together. Okay, next, distinction between bookkeeping and accounting. Distinction between bookkeeping and accounting. So something is bookkeeping, something is accounting. So in a simple language, I can say that bookkeeping, here for business purpose, there is a particular method which we are supposed to follow. I'm repeating, for with respect to bookkeeping, For the businesses, there is a particular method which we are supposed to follow, but for an individual, every individual, one or the other way, is keeping his books of accounts in his own manner also. Okay, if a person is a salaried, okay, and he is not having a business, so monthly whatever salary is coming, okay, out of which whatever expenses are supposed to be paid every month, and likewise a certain amount is kept aside for each month. So here what is happening, that they are maintaining the finances, they are maintaining their own finances. Okay, so that is also a bookkeeping. Every individual, if your family is not into business but into your parents are doing job or something, so they might be maintaining their financials, right? That this is the monthly income, these are the expenses. So everybody is doing their own bookkeeping, right? Without, if the person is not doing the bookkeeping, then I can say that there is somewhere there is a loose ends are there, and the finances are not managed in a proper manner. Okay, yeah. So accounting is a complete system. Accounting is a complete system. So let us read it. Some people mistake bookkeeping and accounting to be synonymous terms, but in fact they are different from each other. Accounting is a broad subject. It calls for greater understanding of records obtained from bookkeeping and an ability to analyze and interpret the information provided by bookkeeping records. Bookkeeping is the recording phase, while accounting is concerned with the summarizing phase of an accounting system. Bookkeeping provides necessary data for accounting, and accounting starts where bookkeeping ends. Accounting starts when bookkeeping ends. Okay, so here whenever a business is doing the bookkeeping, that is they are preparing journal entries and etc. Okay, basis journal entry, ledgers are prepared, and from ledger we prepare final accounts and everything. Okay, so ledger to trial balance and then final accounts. Yeah, so bookkeeping and accounting. First difference is it is a process concerned with recording of transactions. In bookkeeping, what we do, we record a transaction. Either it is a businessman doing for himself or a salaried person doing for himself. All are recording the transaction. Okay, accounting. It is a process concerned with summarizing of the recorded transaction. So here what we do is summarize the transactions. We do the summarization of the transaction. I mean, total purchase is this, total sales is this, total income is this, total expenses is this. Okay, it constitute as a base for accounting. It constitute as a base for accounting. It's considered as a language of business. So bookkeeping is base of accounting. Okay, when bookkeeping ends, accounting starts, and accounting is a language of business. So accounting is like making something in such a manner that other person can understand easily. Why I'm talking about other person? Say for example, there is a business called ABC and Company, which is purchasing some goods from XYZ and Company. ABC and Company is purchasing, so ABC is maintaining some records, XYZ is also maintaining some records. ABC is purchasing from XYZ. Okay, so ABC is supposed to make the payment and XYZ is supposed to receive the payment. So when all the transactions are cumulatively verified. Say for example, there was 10 purchase transaction. Okay, so in the books of A there will be 10 purchase transaction. Likewise in books of XYZ there will be 10 sales transactions. Likewise, out of 10 transactions, for seven transactions, ABC has made the payment. So similarly, XYZ should have received the money. Similarly, XYZ should have received the money for the 7 transactions. Three account is pending. So likewise, so both should have a same thing. Both should have a same manner. It will be in opposite. It will be in opposite side. Like for one it is a purchase, other is a sales. For one it is a income or receipt, or for other it is a payment. Okay. Next, financial statements do not form part of this process. So in bookkeeping, financial statement is not part of the process, but in accounting, financial statements are prepared in this process on the basis of bookkeeping records. Managerial decisions cannot be taken with the help of these records. Management takes decisions on the basis of this record. So basis your bookkeeping, you cannot come to the conclusions easily. Okay, it is possible. It is not. So possibility is there, but it's very difficult. Okay, but with the help of financial accounting records, management takes decisions on the basis of these records. Okay, so this is there is a system which you follow, so you will be able to make some decisions. There is no subfield of bookkeeping. There is no subfield of bookkeeping. Okay, so in accounting, bookkeeping, you don't have a subfield, but in accounting there is a financial accounting, management accounting, etc., which you will learn further. Okay, these are broad topics in the further part. Last is financial position of the business cannot be ascertained through bookkeeping records. So financial position cannot be ascertained, like how much profits is there, how much loss is there, what is business having as a stock, available stock, etc. All these things is not possible here from the bookkeeping. But financial positions of the business is ascertained on the basis of accounting record. From the accounting record, it is easily possible. Next, relationship of accounting and bookkeeping can be depicted in the following chart as accountancy, accounting, and bookkeeping. Subfields of accounting. The various subfields of accounting are financial accounting. Okay, so as mentioned previously, here in the this second last point, point number 5 in accounting, they have mentioned financial accounting, management accounting, etc. So here they have given you the brief of the same. Okay, so subfield of accounting. Number 1 is financial accounting. It covers the preparation and present interpretation of financial statement and communication to the users of account. It is historical in nature as it records transactions which had already been occurred. The final steps of financial accounting is preparation of profit and loss account and the balance sheet. It primarily helps in determination of the net results of an accounting period and the financial position as on the given date. Okay, so whatever we are discussing in the previous topic, that is financial accounting. That is your financial accounting. Okay, the next part, management accounting. It is concerned with internal reporting to the managers of a business unit to discharge the functions of stewardship, planning, control, and decision making. The management needs variety of informations, the different ways of grouping information and preparing reports as desired by managers for discharging their functions as referred to as management accounting. A very important component of management accounting is cost accounting, which deals with cost ascertainment and cost control. Management accounting will be dealt with at higher levels of the chartered accountancy course. Okay, so in the further part you will learn what is management accounting, and as I mentioned that in the last year I have a particular data. Okay, last 3 years data if I have, and monthly sales I have available, so accordingly I can predict that average sales what will happen in the current period also. Like in last 3 years in January, average sales is, say for example, of 5 lakh rupees. Okay, so I can presume at least 5 lakh rupees sales will happen in January. So what I can do is that in the month of December itself I can be ready with the stock available in the month of for the sale in the month of January, rather purchasing immediately or making things a bit in a rush. Okay, we can plan it. So for the planning thing, management accounting helps. Next, cost accounting. The terminology of cost accounting is published by the ICAI of England, Institute of Cost and Management Accountants of England, defines cost accounting as the process of accounting for cost which begins with the recording of income and expenditure or the basis of which they are calculated and ends with the preparation of periodical statements and reports for ascertaining and controlling cost. So here we are concerned with cost. Here we are concerned with cost, means how much cost is being incurred to produce a particular goods or to provide a particular service. Okay. Next, social responsibility accounting. As I previously explained, that social responsibility. Yeah, okay. So they have given you a brief of the same. The demand for social responsibility accounting stems from increasing social awareness about the undesirable byproduct of economic activity. As already discussed earlier, social responsibility accounting is concerned with accounting for social cost incurred by the enterprise and social benefits created. Means if I am doing something easy and fast, okay, but to make that thing easy and fast, what is the cost being incurred? Okay, so we need to make sure that what are the other negative effect of the same. Recently, you might be aware, I'm talking as of 17th of January 2026, government has came up with the that quick commerce regulation, that 10 minutes whatever they are proposing, it is not good for the employees. Okay, employees are working in a rush, that the delivery partners, they mentioned in such a fashion, so the delivery partners are rushing the things and using breaking the rules of traffic and etc. So government has proposed to stop that kind of marketing. Okay, so that is a cost of the same, and what are benefits which needs to be taken care, which are received. Okay, Last is human resource accounting. Human resource accounting is an attempt to identify, quantify, and report investments made in human resources of an organization that are not presently accounted for under conventional accounting practice. Okay, so for you, as I mentioned previously, human resource accounting means, say for example, an organization is having an annual turnover of, say for example, 10 crore rupees. Okay, 10 crore rupees is the annual turnover, and we have 50 employees. Okay, we have 50 employees. So per employee, we are having turnover of 20 lakh rupees. Okay, so per employee we are having turnover of 20 lakh rupees of the business. Okay, likewise, we can do with this thing for expenses. We can do this thing for services. Many things can be done with this with respect to human resource. Means basic number of employees, how efficient the organization is. Say for example, company A has 50 employees. Okay, and they are having turnover of 10 crore. There is a second company, company B, which is having turnover of 20 crores. Okay, and they have 70 employees. So with only 20 employees extra, they are having double the turnover. Okay, so we need to make sure that are we efficient or not. Okay, so you might be aware what is the difference between efficient and effective. Okay, so efficiency is with respect to speed or output. Okay, and effectiveness is usefulness. Usually effectiveness is the usefulness of the particular thing.